Hello everyone, I hope you guys are doing well. It's me Adnan Rahman, your market analyst from Errante. And in this webinar, I will teach you regarding the order block stuff and then the breaker kind of thing that we are looking into. Okay, both of these are almost interconnected with each other, and they follow the same story that we have learned earlier, that is trading into the pool of liquidity while finding your sweeps. Okay, sweeps, or LG, is equal to liquidity grab. Okay, this is very important. You need to keep your eyes on this one, and that is what I'll be explaining you in this webinar. Okay, so now let's start. The main thing you need to see in the market right now is pool of liquidity. If you have pool of liquidity and you are finding your like support or resistance in this area, that is this one I've already explained in my webinars. Okay, then any strategy you might use may give you results. Okay, and if you are out of the zone, just here and there, okay, then you will not get results. That's why this area is very important to grab your attention. Okay, so now let's understand what this order block stuff is. The concept of order block was popularized by institutional trader Mr. Sam. Okay, he was the guy who brought this concept. Okay, and he described these zones as fresh, remember this, okay, as fresh areas of supply and demand. At last, you know that I always say that there are only two forces, okay, in the market. The one is supply and the second is demand. Okay, you need to keep this in your mind. Okay, if you have supply in the market, the price may fall. If you have demand in the market, the price of that commodity or that currency may rise. This is the universal formula that you need to keep in your mind in forex, in any market you trade, even though in your real life as well. Okay, keep this in mind. So what this guy is saying is that this is a fresh level, okay, of supply, okay, and demand. Okay, where smart money initiates positions. Okay, as I said, in these area, smart money initiates its positions. I've explained in the previous webinars, it's called a pool of liquidity, where they want to have their positions set in, whether they can be any type of order, a panic buy or sell, a position buy or sell. They can be pending orders, they can be market orders, whatever. Okay, in short, it's a pool of liquidity that they are wanting to grab their attention on. Okay, and where the smart money initiates its positions. On the other hand, order blocks essentially capture the footprint of institutional activities. Okay, so what do we do in forex trading or any type of trading? We obviously try to find the footprints of institutional trading. See whether if it's like see whether if it's you are trading market profile, okay, or you're trading VSA or price action. Okay, any type of strategy. And right now, like if you are going into the sub branch of this price action, that is CRT, known as liquidity. Okay, and grab sweep or grab. What are all these things? These are things are the footprints of the big institutional activity that is happening, and that is what you are doing. Why don't you just go and buy randomly over here or over here, or sell over here or buy over here? Obviously what you are trying to do, you are trying to align yourself with those big boys. Okay, so this was the concept of liquidity, oh sorry, the order block. And now when an order block fails to support the price and the market breaks through it, the zone becomes a breaker block. For example, just don't go to these levels over here. Obviously I'll explain in the upcoming slides. But what you need to keep in your mind, if you have an order block over here, okay, and you are expecting the market to come down and give it a test over here and then rally towards the upside. If that's not the case and the market moves towards the downside, so your this OB, okay, this one, okay, converts into a breaker block. You can just name it anything, or order block, breaker, or whatever you can name it. Okay, it's totally up to you. Okay, so keep this in mind. And now there are only 6 further slides and you will understand in a minute. This was the most the important one, and now I'll take you to the other slides. Okay, the first thing that you need to keep in your mind while understanding this order block or breaker, how to identify it, the first step is this one. Okay, the first step in tracking an order block breaker is to identify the most recent high. Okay, for example, you have this market that is moving towards the upside. Okay, that is what we are seeing. You are, let's suppose, according to your region, you are just started your trading into a London session or the New York session, wherever. See, this is the recent high over here. Okay, this is recent high over here. So now, just besides just blindly going into buy or sell, what you need to do, the first thing is you need to find your most recent high. In a bearish scenario, obviously, if you're coming downwards, then you need to see your most recent low. Okay, recent low, RL. Okay, recent low. So once we have this, now what is the next step? Once you have this, you need to identify your liquidity pool. That is what I have said. I have explained in a brief webinar earlier what is liquidity pool. You can expect it to be like 50 pips, area 50 pips in currencies, and in gold or oil, you can just select it from there according to the movement of the ATR. Okay, so if you have any area like above 50 pips that was over here in the past as some sort of a like a resistance zone over here, and that is over here, so this is your liquidity area. Okay, for example, market is going up and then market fall downwards and then it started to move up again, so this area over here is your liquidity. Okay, I won't go into details, I've already explained earlier. So once you have this over here, you need to find your liquidity and then you must wait for the market to go and tap into this liquidity. Okay, and after tapping into this liquidity, it must come down as well. It's not that you have to stay up. Okay, you have to come down below the liquidity, because according to the liquidity concepts for smart money, we want to see a rejection, in easy words, a pin bar. Okay, some sort of a pin bar type of a stuff. In easy words, in the price action, okay, it's called as pin bar. Okay, and if you look into the smart money, okay, it's called divergent bar. Okay, and if you look into the VSA, it's known as your smart thrust, sorry, up thrust. Okay, and in market profile, this thing over here is known as, this one, let me take the eraser and let me move this. Okay, this guy type of a candle over here, this one is known as a single print. Sorry for the bad writing, it's pen and it's not that convenient as we write on a piece of paper. Okay, so what we are doing is, if you are price action trader, we will consider this the pin bar. If you are a smart money trader, we look at the divergent bar. And if you are a VSA one, we will name it as upthrust, or market profile one, you will name it as a thing, single print. Okay, so all of these things are indirectly or directly, you may say, telling us that the smart money has played its game. Okay, so what was the game? That it took the market towards the upside. Okay, it tricked or trapped the bulls over here in this area, and then it sold the market, and it took the market towards the downside, and then all these people are trapped. Okay, I've explained everything in detail. If you need further analysis for this one, you can go and watch the other webinars. Okay, so this is one thing that you must keep in your mind. Okay, the way how you need to look at my webinars is, see, those rectangles or these callouts, you may say, the callouts that are in gray color are from the previous slides. Okay, those that are in gray color are from the previous slides, and those that are in red color means it needs to be have looked right now. Okay, it needs attention. Okay, so these two are from the old ones. Okay, and this is now. Keep this in mind. Then it will be easier for you to watch and understand my webinars. Okay, so what I was saying, you guys, like we had this upward movement. Okay, and then we had this tap into this liquidity, and then the market came downwards. So this is your first signal. Okay, this is your first signal that now market may come into a reversal phase. Okay, once you have this type of confirmation, then you can start looking to go bearish. Okay, use the word, listen the word what I said. You can start. Okay, you cannot directly go bearish. Okay, you must start to looking for bearish signals, and then let me explain you in the next slide what the bearish signal might be. Okay, again, as I said, these ones, gray ones, are from the previous slide, and the red one you need to focus on. After what we have got this liquidity grabbing done, the next step is to identify the most recent bearish candle. Okay, in an upward movement, you need a bearish candle. See, I have mentioned over here, in an upward movement, you need a bearish candle, and in a downward movement, you need a bullish candle. Okay, like some sort of a candle over here. Okay, that is bullish. Okay, this is what you need. So now in this particular case that we were going up and we had this bearish candle over here. Now this is our bingo candle. Now we have confirmations over here that by any means, if we are able to break below this level, then it will be considered as a breaker block. Okay, but if we have the market coming here, testing somewhat over here, grabbing some liquidity over here like this, okay, something like this one, or having bullish engulfing candles towards the upside, then we can expect the market to go towards the upside and having a further resumption or resuming the uptrend that was started from this place. Okay, that is started from this place. So now let's see, I'll take you to each and every example on our chart, on our running charts, so you can understand each and everything. Now look at the next slide. Is the same thing that I told you. Gray ones are from the previous ones, and the red one is what you need to focus on now. Okay, so again, think we have this support area over here. We come down, we test it, we go up. It's a continuation. Okay, but we come down, we assume that market will go up, but the market kept going downward. This is a bearish order block. Okay, order block breaker. Keep this in your mind. This is very important stuff. I didn't take you into that fancy type of stuffs and you show you difficult stuffs, and then you would say, man, I don't want to ever trade order blocks. I didn't take you that way. I try to keep it simple and the most easiest I can explain. Okay, I think so this is the last slide, and yeah, this one is the last slide. Oh, this was not the last one. Yeah, the same thing. See, the same thing I've identified and I've explained you earlier. From here, it was a bullish. From here, it's a bearish one. So you don't need to look into these slides further. Okay, now without wasting any time, let's move to our charts and what do our charts say us. Okay, for example, what pair is this? NZD USD. It's on H1. See, now I'll just have this NZD USD and I'll click the order block of H1, and this over here is an order block, a bullish one. Okay, let me zoom in so that I can show you easily. Yeah, see this one, this order block over here. What did I say you? That the market was coming down. Okay, you had this low over here. Okay, and before this low you needed to see the previous bullish candle, that is this one. As the market broke above, okay, so that is your bullish order block over here. Okay, same thing over here is like, now in this chart I'll explain you two examples. The first one is this one, the bullish one, and the second one is, look at this one. See, the market was up. That is what I've explained you. Okay, it has grabbed the liquidity from the previous highs. Okay, up market. Okay, this is a check. Grabbing. This is also a check. And then look for the latest bearish candle. That is this one. Okay, so now if we draw our horizontal line over here, what would we expect? The market to come down and go up? It did not happen. So we had this movement towards the downside. In easy words, whenever you have an order block, that means there is an opportunity waiting for you in either direction, obviously, because market will either go towards the upside or towards the downside or in a range. Okay, these are the only possible scenarios for the market to go. It's not going to come out of your PC. Okay, so this is the only direction it's going. So now in an order block stuff, we have option to go up or to go down. In this range, this is your no trade area, and you need to be safe from this one. Even though by any means, if you're stuck in this area, just get out of it until unless you are a range bound type of a trader. Okay, if that's your strategy. So what we can do right now is, like, we have this order block over here, and we can do one more thing. This level, that Sam guy, what he said was, it's a fresh level of level L for level, okay, of support and resistance. Okay, so as he said, now this level over here, this is a fresh level of support because see, it has not been touched again. So now if the market moves down towards this level and it makes some sort of a pin bar over here, I mean, what is this called, hammer or inverted hammer, whatever, I don't know about that all patterns, hammer maybe, okay, or some sort of a bullish engulfing pattern, okay, then you can expect the market to move upward, and you will have a confirmation on your side that you have entered in a fresh zone of support and resistance. Okay, this is important. Okay, keep this in your mind and see, as this area was a fresh level of support and resistance, there were sellers over here. Okay, this is that order block we had in the past, and see what happened. Market came into this level. So one order block moves the market to the other one, and the other one moves to another one. This is the theory how the market moves in terms of internal range liquidity and the external range liquidity. I hope you have understood this all stuffs. Okay, now let's see. Do we have something on H4? Okay, one thing that you need to keep in your mind is this one, that the bigger the time frame is, the more accurate that order block is. Okay, not even order block, any strategy that you are tying with the bigger time frame carries more weight as compared to the one that is on a lower time frame. Okay, for example, over here, let me switch this on as well, and let's zoom in. See, what we were waiting for is, like, we had, just a few minutes ago, we had our mind that it will come down and then we can go towards the upside. Okay, but we have this level as well. Okay, and this level is from H4. So the market went up. okay, and then it came down, it has tested this level, and then it went towards the upside. Now there is a chance that if we have strength in the USD, okay, then we can expect the market to come down and then touch this level, and then find some resistance over there, and then maybe it can come down or go upwards. The Facebook gurus, they try to make these lines over here and then say this, they say this is 100% signal. I'm not taking into that dilemma, okay. I'm just explaining you on the theory, okay, what the theory says or what the fact says is. Okay, so what I'm trying to say is that anything or any time frame, a bigger time frame has greater results, okay. And then there is one more thing you need to keep in your mind. There can be multiple order blocks as well, okay. By multiple order blocks I mean like a place that is having an order block cluster, okay. And by cluster I mean an order block from H1 and H4 as well at the same place. Like look at this one, see this area over here, it's an order block from the H1, okay. And then the same area has an order block from the H4 as well. Okay, so now this type of scenario is known as a cluster. Okay, and what it means is like it's a bingo point for traders, because when a trader will try to analyze the H1 and H4 time frame together, what he will see order blocks on the tops of both of these time frames. Okay, and then they will say, okay man, this is a very confirmed signal, that kind of a thing. So keep this in your mind. This is very important stuff. And the third stuff I need to teach you or explain you, third, or I think so it's the fourth one. The first one was singular. Okay, the second one was with the support or resistance. The third one is some sort of a mixture of order blocks. Okay, and the fourth one is let me take you to the fourth one. Okay, the fourth order block is your confluence or your combination with the price itself. Okay, because price is the only thing that matters. If the price is up, usually the demand is that price is driven because of demand in the market. Okay, when the demand rises, the price rises. Okay, when the prices are up, that could be a signal that the demand is rising. Okay, vice versa for the opposite. So what I'm trying to say is that the price is the second most important key element in your trading. Okay, for that you don't need any candlestick. You can even work with the line chart as well. Okay, so the price is important. Now let's see what the price has to do with us. Now try to understand the point I am trying to explain you. If you have confluence over the round numbers of your price, for example, see this over here, it's exactly on this area, the H1. Okay, and this is a random chart I have opened on the NZDUSD. It was not a scripted chart. Okay, if you guys like to watch my videos and my analysis live, then you can join me on my webinars, and then we can have a question answer session. Okay, so no issues. And then look at this one, the one from H4 directly on this level. Okay, the one from H4 and H1, see over here, there can be a difference of 1 or 2 or 10 pips. It's not an issue at all, but you can understand that these are levels, and they're not small levels. I mean, they are round levels. Okay, so this is an extra layer of confirmation that tells you that the order block you are looking over here might be valid. Okay, and the last thing what I like from the order blocks is the retest. Okay, let me show you that kind of a setup when we have a retest over here. Again, it's on the same chart. See this one? See this one? It goes up, it comes down, and then it has gone towards the upside. So now if we had movement towards the upside, and then I would like to see an A, B, C, D pattern, but right now what it seems to be, as it's an H1 chart, it seems to be a double top pattern. Okay, a classic an accurate pattern over here. So if you have a breakout below this level, then market will try to move towards this external liquidity that is this place. Okay, if you need to understand the concepts of internal and external liquidities, please let me know or message Errante, and then they will get a webinar arranged by me. Okay. So now, as we have done with this webinar, let me explain or show you some other charts as well, because we are only looking to one chart since then. Why don't we go towards gold and see what gold has to offer us? Okay, this is the gold, and now over here. Okay. Okay, what I am doing is right now that I have an H4 chart over here. I have an H4 chart over here. I have an H4 chart over here, and I'm looking at the H4 chart as well. Okay, see, I have, you know, what I'm trying to say is that I have set the order blocks from the H4, and I'm in the H4 as well. So you can see that an order block is tested again over here. See, this order block, we had this OB. Remember what Sam said? Okay, fresh support resistance. Okay, FSR, you can name it yourself, whatever you feel better is. Okay, he sets fresh support and resistance level. So see, we had this movement over here, and while having this movement over here, we have another order block over here as well. Okay, so what we can say is now OB plus OB. Okay, or from the maths one, what we can say, like how do we do in the maths, like OB twice? What, how do we do it? I don't know. I've forgotten all of the maths. Okay, and now when we look at this one, the other one, see, this is the order block. Again, we had a test over here. Okay, and now over here, this area over here, let me click it. Okay, so once the market comes down, we can expect a movement towards the upside, or if the market breaks below, then we can go to this area. Okay, this is the way you can design your entry and your exit points. And right now over here, this is your bingo point. If the market needs to go up, it can come over here. Okay, now let's see that, do we have any price confluence over here? Okay, 33 level over here. Right, 33 level over here in this order block area. Okay, and somewhat over 34 is this place, right? Okay, it's a difference now. No issues. I mean, there are many places, many occurrences when you have your confluence. It's not only this gold, it's on many other pairs as well. Okay, now let's move to the H1 time frame. Okay, now what I'm doing is I am watching the H1 order blocks on the H4. See, this is the H4, and I'm watching the H1 order blocks on H4. What I can do is I can go for H1 on H1 as well. Okay, I can go for H1 on H1 as well and see that how it works. Okay, like a double top with a bearish order block. And what I can do is I can go in M30 and look for the H1 as well. Okay, so I have all the options available, and that is how we trade. We make our, or we build our case for entry, and then we pursue it. Okay, it's 70% of analysis and 30% of waiting for that to come, for that to take place and for you to enter. Okay, your analysis must be very, very strong, so keep this in your mind. Okay, and then there are other confirmations as well, like see, if you have something like let me show you, like you have your VSAs in your hand. Okay, your order blocks and your VSAs both showing you the same picture. And I honestly, what I like to see is not below H4, because it's important time frame and you can have your good analysis over there. I mean, you, like, just try to understand, there are more than 30 pairs. Okay, more than 30 pairs, and each pair has an H4 chart. And then there are stocks, there are other commodities, there are other indices, indexes, and all that kind. You name it, and they are available. Each of them has an H4. So all you need to do is open your mind and look for opportunities wisely. Okay, so keep this in your mind, guys. I think so. It's enough for now. If you have any questions or any, any questions or anything you need to ask me, or you need this type of setup, okay, indicator, all of this one, all you need to be in an Errante, okay, client, okay, and then I'll send it to you. Okay, no issues. That's all for now. Have a good day, and please remain in touch. Thank you. Have a good day. Bye bye.